A market crash is coming. Will you be ready? That video is available for all of our subscribers at chartingwealth.com. We'll be posting it again and throughout this week for everyone who subscribes. I encourage you to listen to it and learn from it. If you're not a subscriber, you can subscribe for free at chartingwealth.com. It will be posted in the email going out tonight and for the rest of the week. So go ahead and sign up. Check your show notes. You will see it in there. You need to hear it now. You need to hear it now. This is what we are all about, is making sure that you can chart these markets, and you can do it. But you have to learn. We ask 10 minutes a day. Let's jump into these charts. The S&P 500 as we start the week off, down 0.08%. Nothing like what it was on Friday. So anybody jumping in right now needs to be very careful. If you think that you can jump into a down move and call just what's going on, I will remind you that on our biggest chart, our quarterly chart, we are in a confirmed down move, but that is the big quarterly chart. On the weekly, we're still in a confirmed up move, and until we have a weekly vertical crossover going down, we are doing no shorts. Now, let's look a little deeper at what we see going on. So far for the week, as we start off on Monday, we have a red spinning top, means indecision tending down. It's just the first day of a weekly candle. Derivative oscillator is losing momentum. Price percent oscillator not flat yet, still heading up. We do see a big burn off from the prior week's candle that ended up being much smaller than it originally was, and we can look and see where things do appear to be on a sideways slide trajectory, possibly down. But again, until that happens, we do not call it. Now we go from the weekly to the 2-day and look a little deeper. Of course, we had that 2-day chart crossover going down back on Friday. And again, that was a big spinning top. It represented 2 days of movement. Big wick on the top, another wick on the bottom, not as large, but we have the first day of the latest 2-day candle is a down candle, solid red, actually pushing through the weekly trend line. Already blew through on Friday the 2-day trend line. And we had a 2-day vertical crossover going down, which of course would take you out of any trade that you were in on the S&P 500. We see that the derivative oscillators gaining momentum, and that price percent oscillator is confirmed moving over, going down. Now, we look at the 4-hour chart. What do we see there? We see on the 4-hour chart 2 days of movement, things bottoming out maybe somewhere around 278.78, possibly. That's where we see sort of price movement stalling right around there. So maybe not. I mean, the derivative oscillator is still gaining momentum, price percent oscillator heading down, but we do see it touching around that point. So let's just watch and see. Could just be saving up some energy to bound down further, stayed right there above the weekly trend line on the 4-hour chart. So let's just watch and see what we see. We don't have a trade at this point since our 2-day chart has crossed over going down. Of course, we penetrated that 2-day trend line on the 4-hour chart. So let's just watch and see what we see. If for some reason things do recover after a big sell-off of 2 days, we want to be ready to see what's going on in the market. We'll wait for things to sort out. We do need to go ahead and change, as we always do when those things occur. We need to go ahead and change our 2-day chart over to reflect the fact that we had a 2-day crossover going down. And that's the beauty of the software that we use from the Warden Brothers, TC2000, and of course the free version, which is freestockcharts.com. Those of you who subscribe to our daily review can find a discount of $25 off if you decide to go from the free freestockcharts.com to the paid TC2000. Lots of great benefits there. That's what we use to bring you the show every single day. So we go from the S&P 500 back to the weekly to the Qs. Now, we said the S&P was down 0.08%. Nasdaq down about a little over double that, 0.19%. But we see the opening is a red open box candle, not a strong red down candle. And again, somewhere in the middle of that prior week's up movement, derivative oscillator losing momentum, price percent oscillator not heading up at the same strong angle it had been, but still in a confirmed up move on the weekly chart. We go from the weekly to the 2-day, and we can see where we've got a red down candle. Now, again, we've seen that before, actually, a bigger one, bigger 2-day down candle back on the 8th of March. Then things, just settled out and moved up for 10 days. So we'll watch and see what we see. If we see a crossover going down, of course, that is our big warning. Hasn't happened yet. Derivative oscillators lost some energy, not a whole lot, but that price percent oscillator is heading down. And again, we've seen that before. We saw where it bounced off the red signal line. It might be out of steam. We'll watch and see what we see. Now, of course, that 4-hour chart crossed over going down quite strongly in the afternoon on Friday. We had a down morning and then a bit of an up afternoon. Price has moved through, but then moved back up to the 2-day trend line, so keep your eye on that. If you were in a Q's trade, you may have pulled that trade. Now remember, we had a beautiful jumping in point in the afternoon on the 12th, somewhere around the 175 mark, still at 178 about. So if you pulled that trade, that is fine. You can wait for a 4-hour crossing over going up. Maybe you're just holding to see what is going to happen. Either way, keep your trade worksheet notes. If you don't have our trade worksheet, you can find it for free in the show notes we send out every day to our subscribers. You can print that PDF off along with the PDF for the daily market worksheet and the weekly market worksheet. If you don't have a great deal of time, at least once a week when you listen to our weekly review and forecast over the weekend, fill out the weekly market worksheet. Every time you do a trade, practice trade, use the trade worksheet. You will be amazed at how much you will learn from keeping up with your trade and what you learn from it. Again, just a little piece of advice. You want to supercharge your training. Make sure to fill out your weekly market worksheet and your trade worksheet. If you have the time, do the daily. You'll really supercharge it then. What's going on 20-year bonds? Well, we can see that those are going up quite nicely, starting the week off with a strong, one of the bigger candles we've seen in many weeks after bonds were trying to sort themselves out, sliding sideways for quite a while. Derivative oscillator gaining upward momentum, price percent oscillator heading up. We go to the 2-day chart. And of course, that 2-day chart crossed over going up back on the 20th. And huge candle for the 2-day chart ending on Friday, first day of the latest 2-day candle, up quite strong, quite strong. We go to the 4-hour chart, and remember when we had the crossover? We saw it occur in the morning on Wednesday, and of course, in the afternoon, we had, well, let's see, that's the 4-hour crossover, and we've had that occur right at the same time that the 2-day crossed over. And of course, since then, we've had nice, strong up movement continuing. So again, continue to watch, follow that trade, and we'll see how it goes. As long as the stock market is weak, of course, bonds are a place where many times the money flows to. People say, particularly with what's been going on in bonds being so uninteresting over many weeks, why in the world do you track bonds? Just for occasions like we're seeing, and I'm telling you, when the systemic market crash occurs at some time in the future, you're going to see it in two ways. You're going to see it, of course, on the weekly charts on stocks. You're also going to see it in bonds and potentially gold too. So continue to follow, practice trade, bonds, gold, and our S&P 500 and Nasdaq 100. They are worth you following and practice trading. There's a reason we do what we do, because it works and is going to prepare you for the future. What do we see gold doing? Well, I was hoping gold was going to cross over going down so we could get into a short play. It just doesn't want to do it, primarily maybe because stocks are weak. And we see we're going into our second week of up movement in gold. Gold did bottom out around the 122 mark on our weekly chart. And of course, it's at 124.76, moving away from the red signal line. Derivative oscillator, and this gives us a little pause, still negative in gold. We go to the 2-day chart. What do we see? Hasn't crossed over yet. So again, don't have a trade in gold. We got to have that 2-day moving in the same direction as the weekly. Maybe that's part of the reason we've seen that weakness, and gold is still not positive on the derivative oscillator on that weekly chart. Waiting to see when we're going to have a crossover on that 2-day chart to again allow us to look at an upward trade in gold. Remember, we have to have both our weekly and 2-day moving in the same direction. 4-hour chart continuing to move up. Hopefully that movement's going to be enough to turn that 2-day into an up moving chart. Then we can look for a jumping in point on the 4-hour. Want to thank everybody for all of the book purchases. Books have just been flying out of chartingwealth.com headquarters, left and right, along with trader journals, which of course include our weekly market worksheet, daily market worksheet, and trade worksheets. You can print those off yourself, but we've got them in a nice spiral bound edition, 3 months per trader's journal. We're happy to send those out to you. You buy a year's supply, we give you a fantastic discount, and we'll package those up and get them out to you. We're going to our 9th printing on the book. And again, appreciate everyone ordering them. If you live somewhere else in the world other than the United States, you can't order them directly from our current link on the website or link on the show notes. If you will simply email us, that's cw@chartingwealth.com. Tell us where you live. We'll get your email address. We'll send you an invoice from PayPal, and then we'll ship your book out to you. Sent many of those off over the last few days. So happy to get those out to you also. And all of our Patreon members, don't forget, it is this Wednesday when we have, I believe it's coming up this Wednesday, that's when we're going to have our special talk with you guys, and we're going to be dealing with all sorts of fun stuff for you. Yep, it is coming up on Wednesday, and we will be getting up with all of you. That's Wednesday, the 3rd of April. I'm getting the end of the month. We have so much going on right now with preparing some special trainings for you on options trading, along with keeping all of our Patreon members happy. Go ahead and start getting Patreon members your questions and your questions in for the Q&A session on Wednesday, the 3rd of April. And additionally, email us the stocks and the ETFs you'd like us to review. Now, if you're not a Patreon member and you're interested in being in that special group, all you got to do, follow the link on the show notes to our Patreon page. You can sign up. If you're one of those intermediate members, if you're at that level, of course, you get your 15-minute phone call where we go over the things you're the most interested in. That's just a personal call from me to you. And again, for those folks, go ahead and start emailing me some times that you are available. We'll work that out in our schedules and get you on the speed dial. Folks, we appreciate you being with us. We do all of this for you. If you don't have the money to be able to participate as a Patreon, even to buy a book, I want you to start by listening to the trainings. In fact, we didn't offer our book for probably the first 2 or 3 years that we were doing this, 2 years. And we had tons and tons of people who are successful. Practice trading, practice trading, practice trading. And again, I get emails all the time from folks that are so excited about what we're doing. We are here for you. Take one training every 2 or 3 days. Take notes from what you listen to. The trainings are available for free at chartingwealth.com. Print yourself out a weekly market worksheet. Do practice trades with us. Follow these charts. You can learn all of this. It's all here for you. It is not rocket science. It is stock trading and investing, and we want you to learn it with us. We keep it as simple as we possibly can. Again, following Occam's razor, keeping it as simple as possible, but as Einstein said, not simpler. And again, we are here. We're happy to help. cw@chartingwealth.com. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.